Good morning, or should I say good afternoon, all. My name is Jacques Follin. I'm a member of the steering committee, and I chair the airport chapter of WAPPP, the International Association for PPP Units and PPP Professionals. I'm very happy to be here with you today to discuss a sector which has been marked in the recent years by sustained PPP activity, with various positive but also negative experiences. In the recent past, for almost 18 months, the airport world has suffered an unprecedented crisis that has affected the aviation world. Inevitably, the airport PPP industry has been also affected by this crisis. The operations have taken place, and as signs of resumptions of the aviation activity begin to appear, WAPP felt that it was a good time to take a look at the airport industry and private sector involvement in that sector. So who else more than ACI World, the organization representing airports around the world, would be the best position to give us their perspective on these topics. So I am proud and very honored to introduce Patrick Lucas, Vice President Economics at ACI World, to give us his vision of the evolution of the airport industry. In his position as Vice President Economics at ACI, Patrick Lucas leads ACI's policy related to economic regulation, privatization, taxation, charges, commercial activities, and airport slots. He is responsible for ACI's major flagship publications and oversees the production of ACI's world airport traffic forecast and airport economics key performance indicators. He also delivers courses in airport economics as a member of ACI's global training faculty. And prior to joining ACI, Patrick worked for United Nations Statistical Office, where he contributed to major global reports aimed at monitoring economic and social progress. So I hope, Patrick, that I didn't miss any of your part of your incredible CV. Patrick, so we'll start with a quick presentation to give a state of the industry, forecasts, scenarios, private sector involvements, and trends. Then I will be honored to interview Patrick, and all the participants will have the opportunity to ask questions with Patrick, and Patrick will certainly answer to all these questions. So Patrick, I hope that you are online, and the floor is yours.
Thank you, Jacques. Good day, everyone. I'm very pleased to be among you today. I would like to thank the WAPPP, the World Association of Public-Private Partnerships, and Jacques for this invitation. Now, before I get started, I would like to give you a quick roadmap of the presentation. So moving from the recent past to the present and the impact of the crisis on air transport demand. We will also see the state of the industry with respect to privatizations from a macro perspective. Then I will share the outlook and ACI forecast related to both passenger traffic, but also projected capital investments required over the longer term. Now, it's useful to have a historical glimpse to get a sense of where we are now. So if we look back at the last, say, 10 years, it could almost be regarded as the golden era of aviation, with year-over-year growth of about over 5%, with some emerging markets posting even higher growth. Nevertheless, there was still a number of events that still had an adverse impact on passenger traffic going back to 2010. We had the H1N1 swine flu pandemic, we had the MERS outbreak in the Middle East, Ebola outbreak in West Africa, Zika outbreak. We had terrorist activity at Brussels and Istanbul airports, a Russian and Brazilian recession, Euro area crisis, the list goes on and on. Now, many of these events were localized and passenger traffic continued on with a level of resilience. So either through destination switching or quick recoveries. This, of course, these pale in comparison to what we see now in the current pandemic. So as we moved into 2020 and the pandemic was declared and travel restrictions were imposed, we could see the collapse of traffic by March. Now, by the month of April, and this is when we slipped into the deepest depths of the crisis with the commencement of the Great Lockdown, global traffic came to a halt and declined by almost 95% in April. Now, hopefully the darkest days are now behind us in overall traffic declines. The crisis has removed over 6 billion passengers by the end of 2020 compared to the projected baseline. So this is the pre-COVID-19 forecast for 2020, representing a decline of 65% in global passenger traffic. Now let's move to the kind of the business side, the revenue channels. It's always useful to get a sense of the airport business and the core revenue channels. I'm showing the 2019 data here because obviously 2020 is very much distorted. Globally speaking, and this is based on over 900 commercial airports that we survey annually, 54% of revenues come from aeronautical sources, which is basically the darker blue portion of the donut on the chart on the left-hand side. This is made up of passenger charges, which account for the largest share of aeronautical revenues, followed by charges that are levied on airlines, such as landing, parking, and other related fees. Now, non-aeronautical revenue makes up 40%. So this is the lighter blue, and this is made up of retail concession revenue, duty-free, car parking, real estate and rent, and so on. Now, it's important to note that over 70% of revenues are linked to passengers or passenger transactions. So the foot traffic is very important. On the right side, you could see the distribution for Asia Pacific and the Middle East, which have a higher proportion of revenues coming from non-aeronautical sources. In fact, many hubs with higher passenger volumes actually have a majority share of their revenues coming from commercial non-aeronautical revenues. Now, naturally, revenues are tightly correlated to traffic on both the aeronautical and non-aeronautical revenue streams. For the year as a whole, we saw a loss, and this is for 2020, of about 125 billion USD. Now, the challenge is that airports remain a capital-intensive business. Like other infrastructure-intensive businesses, this means that there are high fixed costs, with relatively higher debt levels. So many operating expenses also remain semi-fixed, at least in the short run. So even with low traffic levels, there are certain services and utilities that need to be put in place to guarantee the safety of passengers, but also maintain continuity for cargo operations. Now, airport operators, and this is where private airport operators come into play, often are required to pay a fee to governments for the right to occupy land and or to operate irrespective of their ownership model. Now, many of the world's largest hubs run by private airport operators in places like India, South America, and the Middle East have concession fee payments that represent more than 50% of total operating expenses. So, I mean, this was an important alleviation measure as part of the pandemic. So kind of the removal of some of these concession fees was important for some airport operators during the pandemic. Now, when we talk about privatization from a policy standpoint, it is one option for governments. They may choose not to privatize their airports and fund airport investments themselves. That's fine. Here, I mean, in some sense, and for statistical purposes, we could narrow things down to three types of privatizations, which include management contracts, BOTs or build, operate, transfer, and trade sales and leases. I mean, generally, there is this positive relationship between years of a privatization and the overall skin in the game, or call it invested capital. So the larger the outlay, the larger the risk, and therefore the longer the payback period. Now, if we look in 2016, and this is when we started systematically monitoring private participation in airports, we saw that 614 airports had been privatized across the globe. So this represents about 45% of passenger traffic. Now, by the present day, this has increased to 708 airports, and these airports handle 45% of traffic, as I mentioned. Europe and Latin America and the Caribbean remain the regions with the highest percentage of passengers. So over 75% handled by airports with some type of private sector participation. Now, on the earlier slide, we focused on trends before the pandemic. While the pandemic did create, of course, some investor anxiety, there was still some follow through on some key transactions, especially in places like Brazil and India. We have seen this intensifying role by some major international airport groups like Vinci, Munich, and GMR. Now, most of the participation was through the form of concessions at brownfield airports, but there has been some greenfield participation, or call it follow through. So this is like a Noida International Greenfield Airport in India. You also had Palmera International Airport in Honduras and Tobolsk Airport in Russia. Now, many of our forecasts, many of ACI's forecasts over the short term, which feed into the medium term, so over the next 5 years, very much hinge on the effectiveness of vaccines, the supply chain to deploy the vaccinations to a significant proportion of the population and to develop herd immunity. Of course, international restrictions also play into this as well. Going forward, we will see the biggest uptick as a result of pent-up demand reductions in obviously COVID-19 cases and vaccine rollout in the second half of 2021. We've already seen this in many domestic markets like the US, like China, like Russia, that are basically approaching their 2019 levels, prior to the pandemic. Now, by the end of 2021, we are expecting to be in the realm of 45 to the 55% range of 2019. So this is basically between the green and red lines on the chart that you could see there on the top. Again, there is this pent-up demand. People do have the accumulated savings and would travel if they could. There is this vacation deprivation that we're seeing. So there is this strong possibility we get back even above the green line after 2021, after restrictions are lifted, or travel corridors and bubbles are established on some key international markets that have very high traffic weighting. Now, if we look at the baseline scenario, so that's the green there, which assumes a good proportion of vaccines will be rolled out in 2021 in major markets, traffic is expected to get back to 2019 levels by the end of 2023. International markets, on the other hand, and see the bottom left-hand chart there, we expect traffic levels to get back by 2024 based on the baseline. Of course, there are certain markets like Europe, which is heavily dependent on international traffic and transfer passengers, the same for places like the Middle East. It may take even longer, but it really much hinges on what happens over the next couple of months and years. Now, I'd like to kind of look beyond the short and medium term and kind of past all the noise and fury. I think it's important to remind us all that the long-term fundamentals still apply to our industry. We need to be cognizant of the demography of aviation. Many markets have seen aviation open up over the last decades, and we have also seen the propensity to travel rise quickly with rises in income. Now, interestingly, 80% of the world's population resides in emerging markets and developing economies. If we look at these 4 markets alone, and here I'm talking about China, India, Indonesia, and Vietnam, with huge domestic aviation markets and even latent demand, this represents about 40% of the world's population, okay? Now, our long-term forecasts are very much based on these underlying fundamentals of the future cost of travel, but also, and more importantly, the demography of aviation with its interrelationship to rising income levels. This has the greatest weighting. Many countries have just peaked or will peak in the years to come in terms of working age population. And I'm talking here specifically about the emerging markets. So this is the population aged between 15 and 65. So a larger working age population, of course, translates into a higher propensity to travel. Now, you may ask, well, what about the mature markets of Europe and North America? Well, they will benefit as well. There will be these important feedback loops as a result of international traffic growth originating from these emerging markets. The desire to travel based on affordability is present now in places like the US, which are basically approaching pre-COVID levels, even though we are still in the pandemic and not even considering international traffic. Now, what are some of the longer term implications here with respect to infrastructure or infrastructure development? And what is the capex required to meet this longer term demand once we get back on track? Now, while there was this estimated decline of about 33% in capex as a result of the pandemic, or you could call it capex deferment, capex is expected to be back on track by 2022. This is partly due to the longer term horizons of these investments that go well beyond the crisis. Now, overall, the global net decline in capex was less pronounced as the decline in traffic, but it is very heterogeneous from one region to the next. Some markets like the US, thanks to the CARES Act and a push for some pump priming into infrastructure, did not experience a decline per se. Certain Asian markets remain relatively stable too. However, European markets suffered the biggest setbacks, having to reduce capital spending due to major financial shortfalls. Now, if we look between 2021 and 2040, so the cumulative capex investments required, projections indicate approximately 2.4 trillion in airport total capital investments will be needed to close the infrastructure gap to meet demand. Now, what does that look like? What does that mean, 2.4 trillion? Well, this is comparable to, say, the GDP of some G7 countries. Now, of this amount, Asia Pacific will occupy the largest share. So about 54% of the needed capital investments will be for the Asia Pacific region. So this, as I mentioned earlier, reflects the region's rapid passenger growth and subsequent demand, not only to develop new greenfield airports, but as well as to modernize and expand existing airport infrastructure. Now, even with the crisis and the expected recovery to 2019 levels in several years, traffic is still expected to double by 2040, okay? If we think of this in terms of unconstrained demand or potential demand. However, failure to close this, call it this infrastructure gap, does have some real socioeconomic consequences, which are very much linked to the Sustainable Development Goals, okay? Now, based on this interrelationship between passenger travel, tourism, and overall socioeconomic outcomes, we see that for every 1 million foregone passengers due to airport capacity constraints in 2040, the global air transport industry would support 10,500 fewer jobs and 346 million in US dollars less in GDP. So you do have this multiplier effect of aviation and airports. Now, following the COVID-19 crisis, investments in infrastructure will be needed more than ever to accelerate the recovery. Governments have a key role here to support this recovery and to incentivize investment into infrastructure. This will mitigate the risks of falling short on certain SDGs linked to airports and aviation. And we have 4 of them here with strong linkages to aviation. Of course, I mentioned this kind of the economic growth. You have Goal 9 related to industry innovation and infrastructure development, climate action, very important one. And then 17, which is very close to your association, related to partnerships to achieve these goals. Now, just to recap, and just kind of some key themes that we could talk about. I mean, we saw the huge impact that the passenger traffic loss signifies. I mean, this has repercussions not only for airports and airlines, but all sectors across the ecosystem. There is this, call it the catalytic impact of aviation that extends to tourism sectors, to hotels, restaurants, cultural attractions, and so on. I mean, as much as 57% of tourists actually arrive by air, okay, which is a fundamental lifeline for many industries. The latest crisis has actually sped up some innovations and tested some traditional kind of revenue channels, which we could talk more about shortly. And finally, there is this vacation deprivation and pent-up demand. People want and need to travel. The long-term fundamentals for our industry still apply. It's just a question of building back better with investments that are very much linked to sustainability goals. On that note, thank you very much. I pass it back to you.
Well, I'm online. Okay. Well, thank you very much, Patrick. I mean, it was an extensive presentation with very good messages for the future of airports. I don't have any doubt. But I mean, there will be a recovery. There are plenty of projects, and I understood that there is a future, an excellent future for airport PPPs in the world. But before getting in the depth of the airport PPP world and future, let me ask you a first question, which is directly in relation with your presentation. I mean, we see that the crisis has sped up changes in many sectors, including in the airport sectors. What do you see as major impacts on the airport industry? I mean, would that be innovation, more technology, changes in the future traffic mix, or passenger behaviors, higher impact of SDG? How do you see that? Do you see a new model, a new business model for airport coming up?
No, thank you, Jacques, and that's a good question. I mean, we could think of it along three main kind of channels. I mean, the first one is related to sustainability. So economic and social and governance frameworks has come to the forefront. So these ESG frameworks, as part of kind of financing criteria and financing longer term investments. So these new types of, you could even call them financial innovations, are taking center stage. The second one is definitely technology adoption has sped up. You have, the adoption of these biometric technologies. You now have this gold rush to develop these digital health passes. So there is this move to have all of these integrated technologies to build a seamless passenger journey. So from the point a passenger thinks of their traveling to the point they reach their destination. So trying to integrate all those technologies. Now there's kind of two schools of thought here in terms of the impact that this technology will have on airport revenues, and more specifically commercial revenues. On the one hand, historically speaking, we have seen dwell times at airports be pretty stable, and whenever you have kind of the increased dwell times is positively correlated to revenues or commercial revenues. So the passenger journey may actually speed up, and this may actually hinder revenues to a certain extent over the short run. So that's one school of thought. The other school of thought believes that, well, a seamless passenger journey that has kind of integrated e-commerce platforms and technologies that allow passengers to customize their needs will actually boost customer experience and boost revenues. So there's these kind of two schools of thought now. There's no doubt the business case for technology adoption will increase productivity gains and reduce bottlenecks, but we'll have to see how things play out in terms of how this impacts revenues.
Well, thank you, Patrick. Well, now we have to get back to the airport PPP world, directly to the airport PPP world. You gave us a lot of expectations with respect to need for infrastructure. I mean, need for the government to envisage to develop new airport infrastructure. So, what is the ACI world's overall position on privatization and more specifically on public-private partnership in the airport world?
Yeah, I mean, ACI, of course, we have all different types of members. So we have public members and private members. So ACI does not necessarily prescribe any specific airport ownership model or management model. Now, that being said, and especially in the current crisis that we face, governments are becoming more and more indebted. Now, we've seen that governments have been very quick to react with fiscal stimuluses, but this means more debt. So governments will have to turn to the private sector to develop, infrastructure going forward, right? And especially to meet kind of these longer-term bottlenecks because of the important socioeconomic benefits of infrastructure and airports and engines of growth. Governments will need to kind of turn to the private sector to help with that.
Well, in the past, I mean, many airport PPPs have been seen negatively. I mean, some of them are very positive, but I mean, we've seen a lot of negative thoughts about airport PPP. I mean, increases in fees, limitation of infrastructure development. Well, I mean, in ACI's view, what are the key success criteria to make a successful airport PPP?
Yeah, well, I mean, this could be we could write a book on this, but I think the key one from the outset, and it's not to oversimplify, is to have clearly defined objectives by the government from the outset. So, what do they expect from the privatization, and then the appropriate privatization model could then apply to those objectives, right? Does the government is the sole objective to monetize the asset or increase investment in infrastructure? I mean, does the government want to increase connectivity and generate this socioeconomic multiplier that we talked about? Is the government more interested in operational efficiency or service quality? I mean, that might be more management contracts, or it could be all the above. So the government has to clearly define the objectives so as to avoid misunderstandings down the road. The other thing I think is also in the bidding processes. I mean, having something that is clearly defined, transparent, and competitive. So a three-stage bidding process where you have, an ROI, request for information, an RFQ, an RFP, and opening up the competition, because then the competition then spurs innovation, right? So I think these are some key things.
Well, thank you very much. So I invite all the participants to send their question in the QA box, which is in the conversation area of your screen. Just a question about the regional story in the airport PPP industry. I mean, some regions have shown a very little share in the airport PPP presence, such as North America or Africa. I mean, it's growing in Africa, but in North America, it still remains very low. I mean, these regions have certainly very different history with private sector involvement. Do you see any changes or increasing appetite in those regions? Because there is certainly a need.
Yes, I mean, well, there is definitely a need. I mean, our regional office just came out with a report on the capital needs of U.S. airports. So a lot of especially the terminals need to be modernized there. Now, I mean, one of I guess the reasons why we don't see, at least historically speaking, financing in the U.S. context is there is this well-oiled machinery related to financing. So you do have these tax-free municipal bonds. So the financing costs are in fact cheaper. Airports do have these federal grants and some of the state funding. You also have, and this is more from a kind of a political point of view, kind of American society and historical policy formulation has had a view that airports are public assets. But going forward, we may see some of those things change, like I mentioned earlier, as government debt rises and turns to the private sector to kind of alleviate some of these issues. In Africa, I think it has more to do with the kind of the liberalization of air transport in general. Let's also think of this in terms of historically, private investors tend to be more attracted to airports that have higher traffic or higher traffic growth. So traffic has been relatively thin in Africa. So that is not to say that in the future, I mean, this is one of the regions that, and I mentioned this in the presentation, it'll be one of the regions where the working age populations will peak in the decades to come. So the market is there. But I think there needs to be more advances on air transport liberalization, ownership of airlines. The entire kind of aviation market needs to kind of open up to facilitate that.
Well, thank you very much. A related question is, what about government policies? I mean, how government could create fertile grounds for private investment? What are some tools that governments could use to incentivize private investment in airports? Or in your view, what benefits government could reap in drawing on the private sector for infrastructure development? Well,
yeah, and this
guidelines
is
for governments.
Yeah, and this is a great question, and I think it's kind of central here. I mean, airport operators and investors in airports need to have flexibility. So when I say flexibility in developing both their aeronautical and non-aeronautical revenue streams, so as to guarantee a certain return on investment, right? The other thing is to have kind of a clear and consistent legal framework from the outset. A lot of the business models or the concessions are built around a formula for the airport charges. So, you cannot have a situation where a regulator then comes in several years after the fact and changes everything because you have certain investors which have purchased basically a regulatory model. So regulatory risk is a very important factor that needs to be considered, or the minimization of regulatory risk and having kind of consistency over time. I mean, ideally there would be no regulation, but if there is regulation, then it needs to be consistent. And then the last point, and I think that was more on the aeronautical side, I would say on the non-aeronautical side or the commercial side of the business, I mean, we see this in the data. I mean, investors tend to be more attracted to a kind of a dual till or a hybrid till type of arrangement. Although, you do have private airport operators operating at single till airports. But I mean, this single till arrangement was really born out of this idea where airports were there to provide for the airlines, and that's it. Airport operators are now a business in their own right? So the single till regime, which is basically subsidy to airlines, is kind of a relic of the past, and it's actually even acts as a disincentive to develop your commercial side of your business because you have to give that money away. So I think governments need to think about this in designing kind of the right framework to incentivize investment.
Well, thank you. I mean, just to stay on the economic regulation point, I mean, it is key. I mean, economic regulation is key for airports and obviously for airport PPP. It is for investor a major element of their future profitability. We have to say the word. I mean, investors are investing to make profit. In your view, what does the current pandemic mean for economic regulation of airports? I mean, what is the ACI positions on airport charges, and how do you see the future of this? Knowing that airport charges has been very often a critical point for developing airport PPPs.
Well, and that's a good question. I mean, even before the pandemic, okay, we were seeing in general an over application of economic regulation across the globe. Okay, so this is when I say how charges are treated, and we need to kind of think about the competitive landscape of airports. I mean, airports compete for traffic. They invest in air service development, right? They compete. Some airports compete in the same catchment area. So not only with other airports, but with other modes of transport. You have airports that compete for transfer passengers or connecting passengers. So the European hubs not only compete among themselves, but they compete now with the Middle East, right? So there is this competition, and that's on the aeronautical side. You also have competition on the commercial side, right? You do have this digital disruption, which is a good thing over the longer term. But retail is competing with Alibaba, Amazon, the ride-sharing economy, Uber, Lyft. So there's the competitive factors. There's the competitive factors, but there's also the airline side, where we've seen significant consolidation, before the pandemic and now into the pandemic. And what does that translate in terms of the playing field from a regulatory standpoint? Well, you have significant countervailing power by airlines. You have dominant airlines operating at different airports. So the notion that airports have this market power is not really there anymore because of all of these factors. I mean, just to finalize on this point, the rest of the world actually has a lot to learn from the Australians. And this is very much aligned with ACI's approach, a kind of a light-handed approach to regulation. So allow airports and airlines to actually come to agreements among themselves. So through commercial agreements, it allows for risk sharing, and this has worked very well over the last 2 decades in Australia, showing that there's competitive factors in the Australian airport market. These are kind of some key points I just wanted to highlight.
Well, thank you very much, Patrick. There is one point which is quite important for our association, which is the SDGs. I mean, we believe that it is the art of the next level PPP. I mean, with sustainability measure and climate change issues coming to the forefront, how have airports contributed or aligned themselves to the SDGs?
Sure. Well, you have these 4 goals that I provided in the presentation. One is related to kind of the economic multiplier. So this is goal 8. You have goal 9 related to industry innovation, 13 related to climate action, and then this other one related to partnerships. One of the things, the industry has come together, the airport industry, and we just released this last week, is basically a longer term vision for the industry with respect to carbon reduction. So it's called a long-term carbon goal for our industry, and to achieve basically net zero by 2050, right? As it stands now, you do have many airports that are a part of the airport carbon accreditation program. You have over 60 airports that have achieved carbon neutrality. So the airports are on this pathway. So that's carbon neutrality. There's also net zero, right? So I think it's important to distinguish between carbon neutrality that uses carbon offset credits, whereas net zero, in addition to kind of energy efficiency measures, also uses negative emission technologies to achieve net zero. Well, there's actually, there's some airports that have already achieved net zero emissions, or will achieve it shortly. And some of them include Christchurch Airport in New Zealand. There you have the airports that are owned in Swedavia. So the Swedish airports, they've achieved net zero. You have Dallas Fort Worth in the U.S. that is, will achieve it in the years to come, along with Delhi International Airport as well. So you do have this mixed group of airports that are very much contributing to SDGs and the net zero goal by 2050.
I have a question. I mean, we had recently a webinar on airport PPP and SDG, and it appears that for all the panelists, achieving SDGs was kind of license to operate. I love the word license to operate. I mean, do you see the private sector bringing a competitive advantage in achieving SDGs for airports?
Yeah, I think the beauty there, it goes back to the earlier point. Opening it up to a kind of a government opens this up to a competitive process. You bring in kind of this entrepreneurial spirit, and when you have this competition or competitive bidding, innovation comes into play, right? So I think, yes, it is kind of fundamental to build these partnerships. Again, depending on the government objectives, but I think we have to use all the resources available out there, to achieve these goals. So I think we definitely need to tap into the private sector for these things.
Okay, thank you very much, Patrick. I have a few questions. We have a few minutes, so I will ask you to answer very quickly to this answer. The first one, which is related to cargo expectations. We know that cargo business is growing pretty fast. What is ACI's view and on the cargo business and private sector involvement in the cargo business?
Yeah, that's an excellent question. I think now, and especially I think with the pandemic, we're seeing airports trying to find ways to diversify their business. And real estate development is one area, making use of technology and integrating all those technologies is another area, but cargo development is another important area as well. So we're seeing, I think, investors and airport operators paying a lot more attention to cargo these days. So it'll definitely be kind of an important piece going forward.
Okay, thank you. Coming back to the economic regulation of airport, there's a question on the future of duty-free business and relation with regulation. It says that airports have become heavily dependent on duty-free shopping malls, but governments need to maximize their tax and as they manage much greater debt burdens. So I think, how do you see this relation between having a new, different future for duty-free, a different future for commercial revenue, and governments still having to maximize their taxes?
Yeah, one of the things we're pushing for with airports is not only duty-free on departures, but duty-free on arrivals. So creating a more consumer choice, right? Now, when we talk, so that's one thing. I think we need to broaden the concept of duty-free beyond kind of the traditional channels. But if we talk about taxation, aviation is overtaxed. And oftentimes the taxes are not even used for aviation. They go to the government treasury. We did a study just at the end of last year that looked at the impact of taxation. So if you were to remove certain taxes, and I'm not talking about charges here, it's taxes, the economic multiplier, or the GDP that is generated, is even greater for governments, even double that of what they collect in taxes. So I think there has to be this cost benefit analysis that governments need to think about when it comes to taxes and the economic multiplier of aviation.
Well, Patrick, a last question in the last few minutes. I'm sorry for the question we couldn't answer, but the question is post-COVID-19, do you expect different contractual risk sharing, risk allocation between the private and the public party? I mean, for instance, concession fee structure or others. How do you see this risk sharing post-COVID-19?
Yeah, I think, yeah, and I mean, obviously related to traffic risk will definitely be a very important component here. There'll be a lot more focus, I think, on these force majeure clauses. I think, you know, it's a lot of these, the risk factors will need to be kind of put into play. I think there needs to be some kind of flexibility as well in the concession contracts. So, I mean, to give you an example related to kind of planned capex. You know, having the flexibility to change capex based on circumstance. And this was obviously a challenge for some, you know, for some operators during the pandemic.
Well, Patrick, thank you very much. It was fascinating. I hope all the participants have been very interested by the this presentation, this discussion, and well, it's now finished. And thank you very much again. And I hope that we will welcome you within WAPPP very soon. Thank you very much. Thank you to you. Thank you to everybody. Thank you. Bye-bye.
Thank you, Jacques. It's been a pleasure to be with you all. Thank you.